Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, it's Debbie here from NDIS Property Australia, and you're listening to the SDA Housing Podcast, a show that explains, highlights, guides and brings awareness about all things SDA in this ever-changing NDIS world. This is our regular SDA Unlocked episode where we delve into the supply and demand data for specialist disability accommodation in different areas around Australia. This month, I am going to be talking about two different regions in New South Wales. We basically had a recent client ask us to complete a report on the top 30 locations around Australia that we felt at the current time are the top hotspots, if you like, for SDA development. And obviously it came up with New South Wales as having the greatest demand across pretty much almost all regions, particularly when we take into account the current legacy and existing dwellings enrolled in the system. But anyway, a couple of the locations that came up were in the Newcastle area and in the Wollongong area. So I thought, okay, this could be a good topic to cover both of these areas that are obviously in proximity to the greater Sydney metropolitan area, directly north Newcastle above the Central Coast and directly south the Wollongong Illawarra area. So here we go. Let's look firstly at the Newcastle and Lake Macquarie Statistical Area 4. That covers the Statistical Area 3, the SA3s of Newcastle, Lake Macquarie East and Lake Macquarie West. The whole region spreads from the Newcastle town city, northwest through Hexham and Woodbury, south to Swansea, Waihi, Morisset, and out west to Cooranbong and Cameron Park. The current status of SDA enrolled properties are that there are 210 dwellings with 522 places in that entire SA4. 35% of those properties fall into the existing and legacy category, and 53% of all enrolled properties are group homes. Just to go over what those two things are again, legacy is any larger group home with 6 or more participant places that will be defunded in the case of New South Wales probably within the next couple of years by mid-2027. And existing are properties that may be group homes, they may be smaller homes, but they were grandfathered into the system and they don't meet the new Build SDA guidelines. So there's a large number of properties that are not new build fit for purpose SDA homes is what that means, essentially. So that's the supply. The demand is 544 participants, but currently there's 172 who have SDA funding in their plan, but it's not being claimed. So they're not living in an SDA. The demand is set to increase by 14% within 2 years and 21% by 2032. So we've got quite an increase in participant numbers expected to happen in this area. Looking at the current supply versus the demand, and I'm talking about the supply in good quality SDA homes, those that for 1 to 3 participants only, we know that's the preferred model by both participants and providers. We have an undersupply of 309 places. So basically I'm taking out all the group homes and the existing and the legacy. Now, if we add in the pipeline places that we know are in that region, what's under construction at the moment, and we look at where we're going to be in 2027 with the expected demand, we've still got an undersupply of 223 places. Now, that is quite significant. Just as a breakdown of the types of properties, we've got 54% of the dwellings in the system are high physical support, and 56 of participants have either improved livability, fully accessible, or high physical support in their plan. 4% of the dwellings are robust, and 5% of participants have robust funding in their plan. That is a little bit misleading, though, because 40% of the participants, as per the NDIS data, don't have a category identified. And that is due to a couple of reasons. Either they've not been brought over into the new database properly as yet. It's they haven't been able to identify, essentially, and that's nearly half the participants. So we don't really have a good grip on what they're actually funded for. Now let's break it down into the three different SA3 regions, being Newcastle, Lake Macquarie East and Lake Macquarie West. So Newcastle, being the main city, has almost 50% of the SDA participants. Lake Macquarie East, 29%, Lake Macquarie West, 23%. So the numbers of places and the number of participants are sort of relative across all three SA3s. But just to have a quick look, we've got 247 places in 102 dwellings in Newcastle, 30% existing and legacy, 57% are group homes. We have 270 participants with an SDA need, but 81 are not using their funding. And if we look at the preferred 1 to 3 tenant properties, we've got an undersupply of 164 places. That's 164 places we need in Newcastle. Lake Macquarie East, we have 155 places in 65 dwellings, 43% are existing and legacy, and 52% group homes. 159 participants with SDA funding, 47 are not using it. And that gives us an undersupply of the preferred 1 to 3 tenant properties of 84 places. Lake Macquarie West, 120 places over 43 dwellings, 33% existing and legacy, 47% group homes. And we've got 125 participants with SDA funding and 44 not using it, leaving us with an undersupply of 61 places of the preferred 1 to 3 tenant properties. So that is, as you can see, they're quite significant numbers of undersupply in those three regions. And as a sort of summary, the thing that stood out the most to me when I was looking at this data, Newcastle has a distinct undersupply of robust dwellings. There's only 1 dwelling and enrolled and 10 participants with robust funding. The remaining stock seems to be relatively well divided between apartment and house and villa stock, and for 1, 2 and 3 tenant dwellings. And of course, I'm talking about the new build enrolled properties. So that's a summary of Newcastle and Lake Macquarie. I will look now at the Illawarra area, which is Wollongong, Dapto, Port Kembla, and the Kiama Shell Harbour SA3s. So again, one large SA4 divided into 3 SA3s. So the region itself spreads from Warrenora Dam and Helensburgh in the north, down through Wollongong and south through Shell Harbour and Kiama down as far as Gerringong and Jirowa. In total, we've got 112 enrolled dwellings with 296 places. Very similar to the Newcastle area, we've got 38% are existing and legacy dwellings, and an even greater number, 63%, are group homes. There are 359 participants that have SDA funding, but 148 are not claiming SDA, so they're not living in SDA. That future demand is set to increase, not as much as in Newcastle, but still quite a bit, 5% by 2027 and by 13% by 2032. When we look at the preferred 1 to 3 tenant properties, there's an undersupply of 249 places. Now, if I take the new build and pipeline supply, less the demand we're projecting in 2027, there's still an undersupply of 189 places. As an overview of what we've got, 45% of all the dwellings are high physical support, and there's 71% of the participants who've got ILFA or HPS funding. But there are a large number of the enrolled existing dwellings that only meet basic SDA guidelines, or 42 out of 112 dwellings. So 37% of the current enrolled stock is basic, with participants most likely having basic funding. Now, none of the dwellings at all in the entire Illawarra SA4 are built to robust, but 3% or 12 participants have robust funding. So again, it's only a very small number, but there is always that need for robust. And we've heard in the past that a lot of time providers won't, or support coordinators won't even start an SDA application, funding application, when there are no suitable properties in the area, because it is a time-consuming and a money-consuming program to actually get SDA funding into a participant's plan. When you look at all of the allied health reports, doctors' reports, occupational therapist reports that need to be created and submitted, and they're not done for free. So the participant has to have funding in their plan that can go towards paying for those reports. And if it's not there, or if there's not a lot there, a support coordinator is not going to go ahead and get all that reporting done for an application to go in when there's nowhere for the participant to live anyway. Now, 3% of participants have robust funding across the country. We expect it's going to be about 10%. So I would say that in both of these areas, we could definitely look at robust as being quite a safe option if you're willing to go down that robust property development avenue. All right. Again, we've got some legacy properties, not a lot, but they will be phased out by mid-27. But obviously a lot of group homes as well, which have been recommended being phased out. I looked at some group home numbers that are enrolled with the NDIA in New South Wales, and there are a lot of 4-bedroom and 5-bedroom group home properties. These are actually government housing properties. There, you may have heard us talk about the situation in Victoria where there's going to be around 800 properties coming up for lease ending this year, end of 2025, and the Victorian government is not renewing those leases. In New South Wales, there is no plan to stop or end the leases on these properties. A lot of them are already on a month-to-month basis, but there's no sort of timed phase out of them. However, once suitable new build properties come on the market, participants will be moved over. So when we see in this area, Wollongong, Dapto, Port Kembla, Kiama Shell Harbour, 63% of the places are in group homes. That is a massive undersupply indication. So we look at the different SA3s. Wollongong has got 39% of the SDA participants in the larger area, and the other two SA3s, Dapto, Port Kembla, Kiama Shell Harbour, both have 31% each. The current enrolled places in Wollongong, there's 99 places in 55 dwellings, 18% are legacy and existing, and 56% group homes. And again, that just highlights that in Wollongong itself, there's a lot of group homes that need to be replaced. There are 135 participants with SDA funding and 59 not using it. We have an undersupply of 91 places in Wollongong when we look at the smaller properties that are just for 1 to 3 tenants. The Port Kembla Dapto SA3, there's 106 places over 30 dwellings. 83% fall into the existing and legacy bracket, and 75% are group homes. 113 participants have SDA, 45 are not claiming it. That gives us an undersupply of 87 places in the preferred 1 to 3 tenant properties. Big undersupply. And also in the Kiama Shell Harbour SA3, 91 places in 27 dwellings, 26% are legacy and existing, 56% group homes. 111 participants have SDA need and 44 are not claiming it. That gives us an undersupply of 71 places in the preferred 1 to 3 tenant property category. So in Wollongong, nearly half of the enrolled places, you see majority were actually new build, but they're single resident apartments. That indicates an oversupply of that type of dwelling and a potential need for more villas and houses for 2 or 3 residents in the Wollongong area. So 2 very interesting areas to look at if you are looking at doing an SDA development somewhere in New South Wales. There's obviously a lot more background data to this. I'm just giving you a bit of an overview summary of what I've pulled out of the most recent SDA data, which admittedly is a little old now. It dates back to December. We have a new quarterly data issue coming out imminently, but it's not out yet. So I've gone with this data. And if you do want to know any more about this, if you wish to order a report to go into more detail on any of these areas, we'd be more than happy to do that. And I think these are 2 good areas to consider. Maybe you have an old property in one of these locations that might be worth doing a not done rebuild, or you might have even identified some vacant land worth doing something on. Definitely a hot spot for SDA, I think, now and for the short-term, mid-term future over the next few years. So that wraps it up for this episode of SDA Unlocked. I hope you got something out of it. And please, if you've got any areas you'd like us to cover in future episodes, reach out to us at info@ndis.property. And until then, I'm Debbie from ndis.property Australia, and I'll see you next time.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.